Hello traders, so here we are before FOMC. If I convert this chart to 15, identical accuracy will remain. Do not short into support, do not buy into resistance. The end of the minor trend is everything. And if buyers picking up this steam, it's a beautiful thing. This support been present in the room for days. Never short near. And if I convert this chart to 15, identical accuracy remains. If you can trade 5-minute chart on S&P, if you know where Fibonacci support is, you can trade Netflix, you can trade Tesla, you can trade pound, you can trade anything you wish because price action remains the same. Rates are not raised. This support respected. Expect spectacular bullish rally. And that remains the key. Shorting near not an option. Every single short for the previous week near this support fails. So ask yourself a question. Have you shorted near? If you know where Fibonacci support is, you never do. And you succeed on Tesla, on Netflix, on S&P, on pound. Just took pound 7 years to break through. And if you know where Fibonacci resistance is, you never buy near. Let's expand this chart to 1 so you can see the accuracy of the method and why JP Morgan executive took the course and why hedge fund managers in the course alongside with beginner traders. FOMC in 3 minutes. This will be tested. This is the key at the time of FOMC. The most important financial news in US at any moment. It's a beautiful thing that this support respected. And if buyers pick up this steam, knowledgeable trader will take advantage of that. And if rates are not changed, it's a very good news. So, caution traders, you can see extremely sharp spikes of exponential number of points. This is especially very powerful reminder. Market orders never an option. Ever. So, 1 more minute. Patience, please. Allow market to settle down. And if S&P will spike 20-30 points in a matter of seconds, it's a beautiful thing. And if this support respected, buyers remain fully in charge. And if price collapsing to this support, it's a beautiful, beautiful thing. That's where a knowledgeable trader will be monitoring for long. And if price will skyrocket here, this is where a knowledgeable trader will be monitoring for short. All identified days and weeks in advance. And that's the power of the method. And that's the power of Fibonacci retracements you see in front of you every day that no indicator can give you. Here we go, traders. Incredibly bullish news. My goodness. Rates left unchanged. Extremely bullish. Shock or not. Look at that. Key support present in the trading room for days in a play right now. And the price will crawl up to this level next. It's everything. Knowledgeable trader allows price to settle down. Knowledgeable trader not schlepping market order. Patience, please. Look at that. how brutal and crucial this area is. Pretty please, whatever number of points you're taking off, respect and adore this. This is crucial area. You learn this in the course. This is massive pain. Adjust your trail closer and closer. Pretty please. Not the place to buy, the place to exit. And if right now we will receive a powerful pullback, it will be a spectacular reminder. Market orders never an option. Knowledge of price action and power of Fibonacci will show you where to enter and exit your trade. This is crucial moment in the course. This is everything. We've been stuck here for the last 20 minutes. And that's how dangerous market will continue to be if there is no powerful pullback. So let me remind you exact same Fibonacci levels that we're gonna see next on any chart you choose to trade. On 5, on 15, on any chart. That's absolutely everything this morning that's been present in the room for weeks. The end of the minor trend is a problem. Where price sold off from. Exact same trend inception as I will remind you next on long-term charts on S&P. Here is a reminder. Here's a brutal correction on S&P in 2015, 2016. Do you remember this? Bright green line, that was key resistance on 1-minute chart prior. Key support during brutal correction 2014, 15, 16. What do you see ahead? 2800 number, reversal zone. This chart been present in the trading room since 2011. Market in pain. This 1800 number is trend inception on weekly. My favorite chart of all times. What do you see ahead? 2300 with 2500 to follow. 1800 trend inception 2014, 15, 16. What is the problem? 2200 number. Exact same level, exact same strategy. That's been a problem on S&P this entire week and will be a problem next before S&P will skyrocket, as I absolutely expect S&P here. This is what S&P does next in 2016, giving a big problem. What does a knowledgeable trader knows? As long as 1950 is respected, this is a range. Election night, flawless, stunning, bullish rally. Buyers pick up the steam. Didn't matter if monkey or donkey won the election, because we didn't have many good choices, did we? Bullish rally skyrockets. We're joking with students. Students smarter than Soros. Students not shorting this market. Bullish trades everywhere. Stunning, flawless. Bullish rally goes on. 2500 to follow. And this is S&P 2018. Oops! Shock or not, crashing and selling off. My goodness, we knew that years in advance. Did we? Of course. It's not about day trading little babies' charts, it's about long-term investment decisions. This is what happened 2018. Browse YouTube channel in case you did not see the entire 2018 market and bearish correction. What is crucial? 2500 number. S&P in a whole lot of pain. Continue. It's brutal chop. the entire 2018. Junk is on. Continues. Nothing good is possible. 2500 lifeline. What does S&P do 5 months later? Oops. Continue selling off. What does S&P do 5 months later? Oops. Bouncing from famous 2300 number. Is that possible? Of course. Exact same Fibonacci support where price bounced from in 2016. Identical strategy. Exact same as 1800 number. What a stunning, flawless puzzle market is. And what else do we remember? 2300 was key resistance 2 years before. Boom. No surprise here. Becomes key support 2 years later. And that's what price does, no matter what you trade. And that's S&P right now. On day trading chart, exact same problem, exact same resistance. Choice is yours. Do you want to hold position for weeks, months, and years? Do you want to trade Tesla, Apple? Choice is yours. All in advance, never after the fact. Crawl is on. Identical strategy as on Apple, as on Tesla, as on S&P index fund. Choice is yours what you decide to trade. And again, if I convert this chart to 1, look at this scroll, look at this pain. Those of you who've been here since early this morning, we discussed that this is flawless place to buy. We discussed that price support respected, bullish rally will go on. What else do we know now? That price will do exact same thing. This level is out, this level is next. And if I convert this chart to 5, exact same formula will remain. Identical dance as on S&P weekly. It's all the same. Choice is yours what you want to trade. First things are first. Taking S&P weekly 7 months to break through. We've been sitting here for a week. Are we going to be sitting here for a few more weeks? Let's hope not. This is the key. And if S&P crashes completely, it's a gift. And that's been a dance. From this Fibonacci resistance where market been in pain for hour and a half to this Fibonacci support. Crash and burn S&P, pretty please. Boom. Key moment on S&P, hour and a half dance. My goodness, shock or not, it's respected. Not a good news. Hour and a half of this. Just like on Tesla for the last 2 years. Will Tesla do exact same thing? The end of the minor trend. Lifeline on Tesla. And that's S&P. If you chose to take this extremely aggressive short, pretty please trail carefully. We knew extremely well that's not the place to buy, that's a place to exit long. We knew extremely well if market will finally start crashing, it's a beautiful news. Shock or not. Only if rules are met you can take a trade. Knowledge is power. And if S&P will be at key support 2814, it's a beautiful place, but first things are first. It's a reversal zone. Will we see a spectacular bullish push? Just like we've seen that Apple done from here, all identified years in advance? Is that possible? Of course. Market is flawless Fibonacci puzzle. Adjust your trail. Bright pink line, not the place to buy. Everyone clear on that? Buy at support, not into resistance. You do not need many trades. What you need is quality and knowledge of price. Nothing else matters. Simple. I just saw your post, Joseph. I will take a look, yes. So there is no surprise if short reach reversals. Oh my goodness, are we gonna see spectacular bullish rally? Just like here, RE done from reversal zone to the downside. My goodness, that's what price does every time. Not the place to enter into, the place to exit. So here we go. This is pound. The biggest rally in 8 years on pound despite disaster in Britain, and here's S&P. 1 minute chart, exact same level. S&P is rallying. There is no surprise. Not the place to short into. The place to monitor for reversal. Exact same Fibonacci level. Exact same Fibonacci tool you can install on MT4, on NinjaTrader, on Sierra Charts, on Thinkorswim, on any platform you choose to trade. Rules are met, take a trade. It is that simple. Learn the settings, learn the rules, obey the rules, place a trade. Red line is the key. Nothing in strategy is random. Everything precise, everything to the tick. Oil, in exact same thing, 2016 at 26 staging bullish rally. Collapsing from 55, exact same place where S&P just sold off from. Rallying from key support until reversal zone. Rallying from key support until back up. And this is exact same thing on S&P. Shock or not? Do you want to day trade? Do you want to position trade? Choice is yours. Identical accuracy. Identical formula applies. The rules are met. Take a trade. Rules are not met. Do not touch this market. Separate junk, separate corrective markets from stunning flawless formations. And if buyers step in right now with vengeance, knowledgeable trader will take advantage of that. Because this is not a place to short. This is a place to monitor for reversal. Just like Apple had done. All in advance. On Apple, months and years. On S&P, minutes in advance. So here comes pretty important rally. Here comes the reminder from institutions. Institutions continue buying every single pullback. And that's very powerful lesson this morning. And that's a spectacular reminder. Do not short into reversal zone. Monitor for reversal. Do not buy into Fibonacci resistance. Monitor for pullback. Rules are met. At Key Fibonacci Support, take a trade. Do not wait for the trading room. Hand holding, never a recipe for success. And that remains constant. So this is Apple bullish rally from 2016 to 2018, and this is S&P. Identical charts, identical Fibonacci levels. And if I convert this chart to 5, identical strategy remains. Identical support, identical resistance. And if I convert this to any chart you choose to trade. Identical strategy. And if you want to trade them all, why not? Strategy identical, risk management and trade hold time is the only difference. And that's the lesson this morning. Do not buy near Fibonacci resistance. Do not buy near Fibonacci support. Only when rules are met, take a trade. And that remains constant. So if you would like to join us in the course, pretty please review the information on the website under courses and decide which course you want to join. Any questions, do not hesitate to contact me 925-257-4298 or info@fibinstitute.com.